Hey everyone, Ben here and welcome to Motivation to Invest. Today I'm going to dive into what I think could be the best Chinese stock ever on this planet. So this is an interesting company. The company's called Tencent and it's basically the Google and Facebook of China. So I have covered this company in the past, but in this video it's going to be an extremely deep dive into this company because it is just an incredible company. It's a little bit like a tech version of Warren Buffett's Berkshire Hathaway. And to put things into perspective, the performance of this company and its stock price, if you would have invested just $10,000 into Tencent during the IPO in 2004, you would now have 7.9 million. So this is an incredible company and it's still growing fast right now, so it could definitely be an opportunity to potentially invest. So before we hop right in, guys, if you do like investing tips and exclusive stock market picks, which I'm personally investing into, then feel free to join the investing family by hitting that subscribe button and turning that notification bell on. Do appreciate all the research which has gone into this video. Feel free to give it an early thumbs up, that helps out tremendously with the channel. And remember guys, if you do want to access in real time exactly which stocks I'm buying, selling, or our ultimate investing strategy course, or even join our thriving VIP membership group, details for all that can be found first link in the description below. With that being said, let's dive in. Hopping right in here then, the company's called Tencent, basically the Facebook of China. Now this is 10 cent, not 50 cent. So hopping in right here, we're in the share price here. Interestingly, this company's on the OTC, so the over-the-counter stock exchange, despite the company having a market cap of over $700 billion. So hopping in right here, since 2016, the stock has been on a rampage up 300%. If we hop into more recent times, from March 2020 till now, the stock's up 73%. It is a giant tech conglomerate in China, but it does have access to that Chinese market, that growing middle class, and that vast population. Now, the stock did run up to around $90 per share, February 2021, $100 per share actually, and there has been a correction down now by around 21%. So this could be potential buying opportunity for the stock. Later in this video, I'm going to give you guys my full valuation and buy point for this company. So how is this company made up? Well, it's a really complex giant tech conglomerate, but there are three main segments to this company. The first is what they call value-added services. So this is a gaming segment of the company and also mobile applications. Their most popular application is WeChat, which is basically the Chinese version of WhatsApp, but a more advanced version that other companies can actually build applications on top of WeChat. Hopping in right here, this company is a market leader, so have the #1 number of users in China across smartphone for online games. So they have games such as League of Legends, Call of Duty Mobile, and many, many more. And they also have investments in many other different gaming companies such as Activision Blizzard, Unreal Game Engine, and many, many more. So in terms of WeChat, they have around 1.2 billion monthly active users, which is just crazy numbers. And they also have QQ smart devices with 648 million monthly active users. So this is major. On the App Store, they're #1, mobile security #1 mobile browser. And they also have a mobile payments part of the business, a fintech part of the business, which is basically like PayPal embedded into this company. And they're also the #2 service provider of cloud, so very similar to Amazon. They've got Amazon Web Services, or Google, they've got Google Cloud. This company's got Tencent Cloud. They've also got a video part of the program. They've got Tencent Pictures, which produces movies. They've got Tencent Music, and this is just the main part of the business. Wait till I get on to the investments. Now this graphic here really does show you the scale of Tencent's businesses. So they've got the payments part of the business, which is nearly the same size in terms of revenue as PayPal. They've also got subscriptions part of the business, which is around 60% of Netflix. But this is the special part I do like about Tencent, and that is their investment portfolio. So Tencent has this flywheel, which I'll show you here. So they basically attract companies to build on their WeChat platform, to partner with Tencent to enter China. And then they use that capital to see which companies are doing well, and then they invest that capital into those companies. Then they actually send traffic to those companies, which actually increases the value of those companies, which produces more capital, more money for Tencent, and then Tencent reinvests that, and again and again and again, the company continues to grow. So with all that spare cash, the company invests it extremely well. So Tencent actually owns 5% of Tesla. Yes, Tesla. They own 5% of Tesla, a company which has a market cap of around $500 billion. They own 12% of Snapchat, 9% of Spotify. They own stakes in Sea Limited, which is an extremely popular Southeast Asia gaming company. They own stakes in Discord, link in the description below if you want to sign up for that. They own stakes in Lilium, the flying car taxi SPAC I spoke of previously. They own stakes in Neo. They own stakes in JD.com. They own stakes in Roblox and many, many more. They own 18% of JD.com, which is also a multi-billion-dollar company in China, which is incredible. They own 17% of Pinduoduo, which is also a multi-billion-dollar company. 5% of Tesla, as I mentioned, 40% of Epic Games. And they just have a consistent track record of investing in an exceptional manner. So really, when you're investing into a company like Tencent, you're not just getting their main parts of the business, the gaming, the cloud, you're also getting stakes in all these other different companies, which this company has invested into. So that is the real special thing about Tencent. And this is why Tencent is the number one holding in most of these Chinese ETFs, these Chinese index funds. What I also love about Tencent is the company is founder-led. So this is the founder here, and he was a real sort of Mark Zuckerberg style founder. He used to be a programmer, he won a lot of hacking competitions, and then he grew the company from humble beginnings to where it is today. In terms of the financials, the company has exceptional financials. So they have high margins, 39% margin, of course, gaming software, great margin businesses, high growth, around 20 to 25% growth considering the company's size is incredible. High return on capital, 17%. So just exceptional company overall. So what's my fair value and buy point for Tencent stock? Because it's clear it's an exceptional company. Well, hopping in right here, this is my deep dive valuation model. If you guys do want to access my entire stock research platform and all my valuation models and our thriving VIP Discord group, check out that first link in the description below. Either way, diving in right here, revenues around $78 billion. The company's been growing massively. Cash, they have around $35 billion in cash. I've predicted a 20% growth rate moving forward, then 15% after, because the company is exceptional company, but it's just so large now. Mathematics say it will find it harder to grow on a percentage basis. And hopping into my valuation output here, no messing around, guys. I get an estimated fair value per share of around $60 per share. Now, the stock at the moment is trading around $78 per share, so it's a little bit above its fair value. However, I have checked out a few different valuation models, and it does seem quite close to its fair value. And as I mentioned, and as I explained to you guys, it's such a complicated company. They have stakes in many different types of companies, so I do think Tencent is a company which you could have in your portfolio for the long term. Of course, guys, this is not financial advice, and I'm going to get onto the risks a little bit later in this video. So the risk really with this company is, of course, it's a Chinese stock. So we've got the Chinese risk, we've got the political risk, the US-China trade tensions. They've got the fact that the Chinese government wants to put a lot of pressure on these big tech companies, which doesn't help the valuation multiples on companies in China. We've also got the fact the company's shares, because it's a Chinese stock listed on an over-the-counter exchange in the US, that it doesn't really give you direct access to the company. Usually with many of these Chinese stocks, you invest into a shell company and not directly into the company, which is a little bit of a complication, but it's just something we have to deal with if we do want access to that lucrative Chinese market. So as it's a Chinese stock, do expect a lot of volatility. I also noticed the legendary investor Carl Icahn had sold his entire stake in Tencent very recently. So maybe that was because it ran up massively, sold it when it did hit its peak, really around $99 per share. So maybe he just thought the stock was overvalued and he decided to sell out and take some profit. Maybe he had some better opportunities. There's also been quite a bit of insider selling by the president between $70 and $80 per share. So if you do want to access those live updates, my live buys, sells, my entire portfolio, feel free to check out that first link in the description below for our ultimate investing strategy course or our VIP Discord group. And with that being said, guys, if you did find value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the family by hitting that subscribe button, turning that notification bell on. So thank you guys so much for watching. I hope you guys all have an incredible day, and I'll see you in my next video. Invest safe.